Hey there, fellow taxpayers. That dreaded IRS letter in your mailbox can send shivers down anyone's spine. But here's the thing. Knowledge is your greatest defense against audit anxiety. Today, we're diving deep into tax audit limitations and your rights as a taxpayer. Information that could literally save you thousands of dollars and countless sleepless nights. Did you know the IRS can't just audit you anytime they want? That's right. There are strict time limits set by law. Under Internal Revenue Code IRS 6501A, the IRS generally has only 3 years from the date you filed your return to initiate an audit. That 3-year window is your first line of defense. But wait, there are exceptions you absolutely need to know about. If you omitted more than 25% of your gross income, IRS 6501E extends that window to 6 years. And here's where it gets serious. If the IRS can prove fraud, there's no time limit whatsoever under IRS 6501C. The landmark case of Allen v. Commissioner highlighted this distinction when the tax court ruled that the burden of proving fraud rests entirely on the IRS, and they need clear and convincing evidence. Now, what happens if you've been keeping your crypto transactions off your returns? The tax court in Jarrett v. United States, 2023, confirmed that cryptocurrency transactions must be reported as capital gains, and failing to report them could trigger that extended 6-year statute. The Infrastructure Investment and Jobs Act of 2021 codified this requirement, which continues to be enforced in 2025. But let's talk about your rights during an audit, because you have many established under IRC Progress 7803A.3, the Taxpayer Bill of Rights. First, you have the right to representation. You don't have to face the IRS alone. You can hire a tax attorney, CPA, or enrolled agent to represent you. In the pivotal case of United States v. Huge, the Supreme Court affirmed this fundamental right to representation during tax proceedings. Second, you have the right to appeal. Disagree with the auditor's findings? You can request a meeting with the manager, file an appeal with the IRS Office of Appeals, or even take your case to tax court. The process was streamlined under the Taxpayer First Act of 2019, with provisions still in effect in 2025. Third, you maintain the right to privacy and confidentiality. Under IRC Part 6103, your tax information is confidential and cannot be disclosed to third parties without proper authorization. Here's something many don't realize. You have the right to challenge the IRS's position. In United States v. Microsoft Corp. Section 2015, the court recognized that taxpayers can present alternative interpretations of tax law and challenge IRS determinations with their own evidence and legal arguments. So what should you do if that audit notice arrives? First, check the date on your return and verify if the statute of limitations has expired. If it has, cite IRC for 65011A in your response. Second, understand what type of audit you're facing. A correspondence audit, office audit, field audit, each requires a different approach. Third, gather all relevant documentation. Remember, under IRC Fargo 7491, if you provide credible evidence, the burden of proof can shift to the IRS, a powerful advantage established in the tax court case of Knudsen v. Commissioner. Finally, consider professional representation. Statistics show that represented taxpayers typically fare better in audit outcomes. The tax court in Estate of Giovacchini v. Commissioner recognized the value of professional guidance in navigating complex tax matters. Remember, most audits result in no change or even refunds. With proper knowledge and preparation, you can face an audit with confidence rather than fear. If this information helped you, please hit that like button, share this video with someone who needs to hear it, and subscribe to IRS Tax App for more tax-saving strategies and legal protections. Your financial future might just depend on it.